And also, sorry. Oh, I'm sorry. Things stopped. I hope you are looking right now, because it stops and it goes back again. The stream, it says it's good, but I didn't see. The picture is always the thumbnail. So I am in live, but do you see me, guys? Or do you hear me? Oh, okay. Are you looking at the chart? Because here I don't see any chart. Oh, okay, okay. Okay. Thank you very much. So here it says it's good. I don't know what's the problem. It means okay, here it says you are live and it's very good, but I don't know. Oh, you look at the chart? Oh, okay, okay. I will continue explanation, because for me, I don't see anything right now. Okay. Oh, okay, okay. I see the chart. So I will just begin to explain. Okay. So this is the steel and iron index. It's an industry, okay? So you see that it is doing very good. You know this lately and afterwards. This is gold, not doing good. Aluminum, it was, but it's going down. Silver, the index is so bad. Now, what does it mean it is so bad? It means most of the stocks are doing bad, most of them. And these are just companies from different. If you are interested, to know any company, whatever is the industry, you should go to each industry and you work on it. Okay, this is what I want to tell you. So let's say if you are for the one who asked me about yes, about safe gold and silver, I say to you, there is no safe investment. Try to understand. There is no safe, because whenever you enter the market, either you make money or you lose money. There is no a static thing that you stay where you are, because the stocks move. Okay? So when the stocks move, it should be doing something, either up or down. That's the main thing I am saying. So as I told you, whenever you look at stocks, you will find that these kind of stocks are different. If we go, just an example, to the Dow Jones, we see its stocks, we find some nice trends up, but we see also some trends that are not good. Some trends are going down, and some they are short, and some they are good. So it depends on who is behind these kind of trends. If there are a lot of short sellers, a lot of analysts who are against the company, sometimes you see a very bad trends, and most of the case these stocks don't trend very well. Rahmatullah said, today all oil stocks were down. Oil stocks are down. Okay, let's see. Ah, yes, they go down, but see. But did you see the trend first? This trend, I have spoken about it many weeks ago. Don't see the day-to-day things, but try to see the trend. It's not because of oil, it's just because of Dow Jones, mostly. Yes, Dow Jones go down, but it has been going up also on Monday. Monday good, Tuesday bad. Okay? So when you want to look at a trend, don't look in one day, because one day could be good, the other will be bad, but try to see the other things. Okay? Yes, this one is too bad. Bad, yes. Almost all the stocks are down, yes. Okay. This stock is going up. At least we find something which is not the same. Okay. Okay, we have 700 shares. Someone has bought 700 shares and this stock's going up, which is very funny with these small stocks. Oh, okay. See, let's say, for example, yesterday it was good and today was bad, depending on the market. Okay, we have another thing here. Now check. This today is good. $1.29. Okay? So there are a lot. We can't go through them all. It's too much. So we stop like this. Now, it is the thing is, day traders in the morning, when they see that Dow Jones, S&P 500, Russell 2000, they see the whole market is moving down, they go and they try to sell short stocks that they found with all their money in order to make money. And it is the best day to do that. So understand that some people, they don't care if the market is going up or going down. So if they go down, they go with it. If they go up, they go with it. So they don't care about the trend. Okay? So understand that when we follow stocks, we follow the trend. We don't follow the day. Okay? We don't follow day by day and we begin to check each day. Okay? When we check each day, it's just to see if the stock is still strong to continue its trend. This is what we're interested in, because things will change. If a day is bad today or tomorrow, it will be going up the other day and the other day, the other day. That's why the stocks are going up. So this is what I mean by that. Okay? So as I told you, when we see the trends are so different, So, Sammy Caprio said, you teach all these charts and how to trade them, need make money cash so I can get nice looking girls. Oh, okay. So you need to trade, and then to have money, and then to have good girls. Okay, why you don't go to good girls and that's it? You don't need money, you don't need anything. So you should just follow the trends. This is how you can make a lot of money from stocks. Because if you stay with day trading, it is more stressful. It's a lot of directions in the day because the market is so volatile. Some people are shorting and the stock is going up. They must lose money. If the stock is so strong, they lose money. But when they begin to lose money, they change the direction. It means they just play with these stocks. They don't care what's going on in the market. The most important thing is to be with the winners. This is how you become a good trader. To be with the winners always. You don't be stubborn and you see that the stock is going down and you are going long. Because here it's like a democracy where the majority of opinions beat the other one who are small. This is democracy. It means they see the majority of shares where they are going. Are they going up or down? Is there more sale? It means a demand for the stock. Or is there a sell-off? Now, so the question is, so how to deal with stop loss since all stocks go down? So, stop loss, you should know where to put it. And I told you, if you get an exited trade, I have explained this before, Rahmatullah Modi, and I know you are my subscriber, and I have explained this in other videos, but I will explain it again and will show you. This is what I told you before what to do. So, let's see. Okay. This is just to explain things. Now, you are in the stock. $20 is doing good. And then it begins, let's say here is your stop loss. And then it goes down, pop, and it hits your stop loss. So here you exit. Okay? Let's say here it's $25. Let's say here it's $24. Just an example, okay? Now when you exit, you should take this stock, let's say it's called XYZ. This is the name of the stock. You put it in your portfolio and you follow it for many days. You follow it. If the stock continues to go down like this, it means that this stock is not good and you are right. Your exit is right. Now, what if the stock is going down and then it goes up again? You buy it again. This is a technique I use many times when I was in a stock. If it continues to go up, it means that you should follow the trend that you have before. Okay? But if the stock goes down, understand that this stock, you should not put it in your portfolio and you should delete it from your portfolio because it's still going down and now it is $17 as an example. So this stock, you just forget about it and find another stock. But if the stock after a few days goes up again, here, it goes up again, it means that this old stock, okay, that this stock is very good to follow again. You say, for example, to yourself, just an example. You say, why should I use a stop loss? Why? Why I don't just leave it? Now, if you leave it, and now it is 17, instead of losing $1 here, it means you lose $100. This is your risk. If you buy 100 shares, example, from 25 to 24, you lose $100 in your trade. Now, how much you lose if the stock goes to 17? You will be losing $800. Now, what do you prefer in your life? To lose 100 or to lose 800? This is the thing that you should always focus on. Is the risk. Are you risking 800 or are you risking 100? That's why the stop loss is always good when you are doing swing trading or short-term trading or day trading. Okay? This when you are doing what we call swing trading. And even, let's say you bought it at $20, the stock was 25, you have here $500 profit. You will be losing this $500 until it becomes a loss of $800 from 25 to 17. So this is just an example. I want to make sure you understand why we use this stop loss. Okay. Sami Caprio say, it's easy to put stop loss on when you buy. Yes. Now, it is easy. You put stop loss when you buy a stock. This is the initial stop loss. But another, it's not really called stop loss, but it's called the exit point. Where do you want to exit with the profits? Some people, sometimes they make a lot of money, but when the stock is giving money, it's going down, they can't exit because they say, oh, it might be going up again. It might be going up again. It might be going up again. And the stock each day, they take from their profits a lot. Until one time, there will be no profit and there will be maybe a loss. Sometimes they begin with a winner and you end up with a loser. It happens to all the people. Okay? It's not something that it happens to only one or two. It happens to almost all beginners because you don't understand how the movement of the price works. This is the problem. Now we have another question from Desra. What's your job? What? My job? Okay. My job, I am a swing trader. I do swing trading. It means I trade for a short-term trading, and I teach beginners how to trade. Okay, that's it. Now, Rahmatullah Modi said, can you check stock CVI and HFC? Okay, I will do that. Juan Di Casa. Hey, you are live. Yeah, I am live. You see me? Live. Okay? You are the only one who is always asking me, are you live or not? Okay. I don't know how do you see the video right now, but I see the people who are in chat. I think in chat, I don't see what the people are commenting on the video, but I see only the chat. The chat is only for the people who are watching. So I have no idea how this works because I am inside my account, so I don't see what the people are doing in the comment section. But I am live. One Dikaza said, I'm just kidding. Me also, I'm just kidding. I'm just kidding also. It's just a joke. Now, Rahmatullah said CVI and HFC. CVI. Let's see. I think we have seen this before. Yes, we have seen this before, I guess. So it was going into a trend, a very long trend. You can see here, a very long trend, and then this is a trend up. We have trend down or downtrend, and there is now a trend up. Or we will never know where it goes down. The other one is HFC. HFC is the same. See? It's the same as the others. We have a very, very long trend up, a downtrend or small correction. Now we are in a very long trend up. Okay? So let's see. Now, as I told you, but understand, Rahmatullah, Modi, that I made videos in my subscription, I think 3 weeks ago, and 2 weeks more ago, like 1 month or more, I'm explaining how to buy from the bottom. I was explaining that, and I give the energy sector as an example with utilities. I have explained all that. But don't wait 1 month or 2 months and then you want to enter at the end. Okay? Because there is what we call the momentum. The momentum is the right time to buy. You shouldn't wait. When you see something good, you should buy. You shouldn't wait until the trend is so big and everybody sees the trend. When everybody sees the trend, it will be very volatile. And the media will talk about it. When the media talk about it, it will be too bad. Because a lot of traders, they come and they begin to short this trend up and down, and it will be a mess. That's why when you do things, hope the voice is good. I hit my microphone. So, as I told you, when you should buy when the people, they don't find these things. Beginners, they don't find it because they don't know how to find these stocks. Because understand, there are 24,000 stocks, ETFs, and mutual funds. How can you know one, like Facebook is going up? How can you know? How? You will not know if you don't follow this stock, or you have a portfolio, or you know how to search. So these ideas will explain to you what's going on into the market. Okay, let's go and see Tomba Nair. Please check CELG and PFE. CELG. CELG. What? Oh, this is bad. This stock, you see, it has two big gap downs. The stock was 146. Now it is 74. It means it nearly lost 50%. So what are you thinking about this stock to do? Do you think it will go up again? I don't think so. I don't think so. The other stock is, okay, let's see, PFE. PFE. You know, I don't like this kind of stocks, you know. I don't like them. See, they do like Dow Jones. So it means it's like Dow Jones stuff going up and down, up and down. So there is no clear trend. Okay? And let me see. One Picasso said, the stock TGA, I am stopped out with profit. It was a big red candlestick today. All energy stocks are down today. TGA. Oh, yes. Oh, listen. I think someone has told me about this. Is it you that you talked to me and I told you it's like a pump and dump scheme? I told you about this stock. TGA, I spoke about it yesterday or the other day. I talked about this because I still remember this stock. So you see how the people, they play with this stock. Okay, so here it was very normal, and then it goes so down. Okay, no problem with that. Now let's continue. Trump said financial sectors is bullish. There are a lot of sectors that are going up, most of them, but not all. Depends on the stocks. Rahmatullah Modi said, yes, I bought some stock of energy last month and I still have those stocks and I made lots of money. Yes, thank you very much. You know, the best thing is, I'm telling you, it's not even making money. It's not to lose money. When you have good stocks and you make money, sometimes you can make a lot of money. And this lot of money can cover all the losses that you have done in other stocks. And this is the very good thing. Okay? But understand that if there is a bad day, or 2 days or 3 or 1 week bad, it doesn't mean that the trend will stop going up. It might be a correction. So you will never know, even if you exit a stock. I told you many times, especially when there is a big movement in this industry, put these stocks into a portfolio and leave them there. After, day by day, check if those stocks are going up again. Because the buyers, they are waiting for these guys who are scared to sell and then they buy again. I will explain. Because I know a lot of people of you, they have an idea about trends, but they don't understand really how things work. Okay? So just an example. Just an example. Okay. We have a trend, then it stops and it's going down. Now, when it is going down, we have two actions in this going down, in this correction. Two actions. I have explained this. This is a correction. A correction, it doesn't mean that the trend was wrong and there is a correction. No, it's just, it tells that this correction is natural in the market. It's normal. Natural and normal. It happens always, so it's normal thing. It's not something exceptional. Now, when there is a correction, things will go down. This, we have two corrections. We have some people here, some people who are selling off. It means they just sell their shares. Now, when these people begin to sell their shares, the stock is going down. You find short sellers who are selling more, okay? Selling more shares, selling more. Shares of these people here, they don't want to sell. So we have two actions. That's why the correction will be very, very quick and very fast, and it is destructive sometimes. It means it is destructive sometimes. It means it destroys the trend itself. But most of the time it is not. Now, what will happen later? 1 day, 2 days, or 3 days, or what will happen? Some people here, they buy from the bottom and the trend comes to go up. Okay? They buy and things will go up. Now, sometimes if the trend continues, you will have the long trend continues like this. This is the long trend. This is a correction. And it happens always in the market. So it's all very nice. Oh, I'm sorry. I'm sorry, I was explaining. I'm sorry, I was explaining without showing you. So I will repeat it again. Sorry for that. Sometimes I didn't click on the thing that you see. Sorry for that. I will repeat again. Okay? Sorry. So let's go. Let's go again. And I say that sometimes there's a trend, it stops, there is a correction. Now this is called correction. Okay? A correction, it means that some people are selling and you will find red candlesticks. Now, why the correction is very fast? Because we have two actions. Two kind of people are working to make the trend goes down into this correction. So we have the people who are selling off. It means any person who is selling his shares, either with a stop loss, like let's say stop losses are here. So all this will be selling off. And there are some people who just sell because they see they have a profit here. Profit. Okay? They have a profit, so they sell. Now, some people are waiting for an opportunity to buy. When the correction is down, here, they go and they buy stock. Okay? And the trend can continue and you will have a very long trend. This is the trend continues. The trend continues and we have correction. We don't have only one correction. You could have many corrections in a trend. That's why when you see the trend, you see it like this. you see a trend like this. This is just an example. Okay? So this is the trend. But understand that the stock was $20, for example. Now it is 45. So this is the whole trend. The whole trend is this. And these are corrections. Corrections are natural. It happens in the market always. And it is beneficial because when the stock goes down, here we have people, they buy. And all of them get money. But this who bought here at first, which is mostly us, swing traders, they buy here most of the time. They can buy here and here and here, but swing traders, they want to be the first to buy when there is a movement. The first. Now, the beginners, they come at the end here. When the trend is good and all the people see it, they want to buy here. So they buy always at the end. Okay, this is just an example. Thank you, Rahmatullah, for following the rules and buying on time. You have made money. It's because of you and your hard work, and you try to buy on time on the momentum, and that's why you can make money, and you will make money in the future as easily as that, because you will see that things are easy. Just you understand how things work. But if the stock doesn't move, it means it's not your problem. You find another one that it is moving. So don't wait for losers. Okay? Don't wait for losers. If something doesn't move, leave it aside, put it in a portfolio and leave it. When it's moving good, you buy it again. Now let's go to Robert Polo. Karim Djellala, I feel that most trends are the same. When you buy during the bull market with a few good criteria, most will be successful. I do know let's see here. What did he say? I do know when Facebook is going up, I feel. Okay, if you do know, it means it's very good. It means you take stocks and you feel them, which is very good. If you have an experience in trading stocks, yes, you begin to feel. But for me, I don't like this word feel. I don't feel things. For me, I see an opportunity and I have criteria to follow. Okay? I don't read the news or see what the company do or have an impression, because there are some companies that I have never seen the name of the company. Believe that? Do you believe that? I know just by the ticker. And then after 6 months, I see the ticker again. It means the symbol. Oh, I see. One time, I traded a stock called WW2. I thought I think it is a company making history about World War II. I think like that because I see WW2, which is World War II. But later, I understand that it is just wrestling company that we see on TV. So you know that? I don't follow the company's news or names. I don't care. What I care about is that a company stock meets my criteria, I buy, whatever people say. And since you say, I feel Facebook, for me, I followed Facebook when it is IPO the first day, and I bought it the first day. Okay? And I bought all the trends, all the gap apps. I was almost there, and I was always publishing. When I finish the trend, I will publish that. But I will not say when I bought or when I sold. It means I just show where I was, the trend, and I show the stock. Okay? So, Sami Caprio, if you see it on CNBC, run. I watch a lot of news, too much CNN, not good. So, when you watch CNN, it's for entertainment. It's like people, you know, when you say a stock has a gap up, what does it mean for you if you don't buy it? If they told you last year, energy sector has done 75%. If you bought the ETF or the stocks from that time to this time, you have made 75%. Okay. Have I bought energy sector last year? If you have not, what's this news can do for you? It can do nothing. It is just they ask you to buy now when the trend has finished. Why? Because they want to sell. Because if they tell you, it means you go and buy because you heard the good news of last year. But for me, I am not living last year. I am thinking about the future. I am not thinking about the past. So this thing you should understand very, very well. What the news tells you is for entertainment. To tell you things that most of the time you don't care. If it is not related to you. Okay? Let's say you own Facebook and they talk about it bad. It has a problem with the government. There is a breach there is a breach of privacy. Facebook is doing something bad. Yes, you get interested because you own this stock and you invested for many years and you should know about this company. This is very good because you own Facebook. But if you don't own Facebook, for you, what is it? Nothing. But a lot of people, they have time to watch. A lot of time to watch, and you think you become, you understand everything. But in real life, they always give you information that it is superficial. It changes this information. Last year, it doesn't mean next year. And if you understand what I say about industry rotation, you will understand that things are moving each day. What is good last year becomes maybe bad this year. What is bad last year, it can be good this year. Like the energy sector, it was going down, then it was going up. Okay. Then it goes down. You see, it depends where you are in the market. Thank you very much, Wendy Casa, Wise Man. Yes. Wise Man said CELG stock like that scary roller coaster. I don't know, you are always using roller coaster. I didn't watch that movie or something. Robert Polo said, haha, good comment, Sami. Yes, too much TV is too much TV. You are just wasting your time. Thawanrat Podam, he says, I like to hear you. Thank you very much. I am also making this live videos to interact with my friends, with my students, with my subscribers, or anyone who wants just to hang out and ask questions, or we can share information. Because for me, it's just something which we discuss about the market, what's going on. Robert Polo said, do you use TC 2000 or free stock chart? No, I use free stock charts because it's free. I don't pay any penny to anyone. Anyone who asks me to pay, I will not pay. I will change the service because I don't need more features. It might be if you are doing, let's say, day trading, you need a news, you need a very strong chart with a lot of features. You need that, you need that, you need that. But for me, I don't need that. I don't need any to buy from the chart, as they say. Why should I buy from the chart? Most of the time, those people who do this, it is just for day traders to help them execute things where they see the chart. Everything is in the chart. They just click buy 1,000 shares of this. You click, order is confirmed, you have 1,000 and you see it. And there are so excellent charts, but you should pay for them. But for me, I am not a day trader. That's why I don't use and I don't spend money like this. TC 2000, you should pay for subscription because they give you news, they give you this and this and that. And for me, I don't need them. I don't need their help or their features or their news or whatever happens. I don't need that. That's why I don't use them. So, Trump said, my criteria to find stocks is in Finviz, 5% negative volume is over 2, current volume is over 2 million. Okay, Trump, you are free to use whatever you want. Okay, whatever criteria. Because each person who doesn't know what to do, he can choose any criteria, whatever. So that's why it's very good to be free. You can use anything. But for me, I don't use your criteria. Robert Polo said, I have to say, the major key number one first point to success may be your stock search scan criteria, and those who have the best criteria may not share it. No, it is not just to search for stocks. It is how to follow them. Because there are many things related to each other. Sometimes you search, you find the best stock, but you exit it early. And someone knows how to deal with the stock, he will stay and he will make thousands of dollars. You make $200 or $500, but another guy, he buys the same as you do, but he makes thousands of dollars. What's the difference between these two people, you and him? It's just because he knows how to handle the stock and you don't, although you discover the stock the same. Okay? For me, when I discover, for example, Facebook, even when it is going down, I have a good impression and I make money from it. Whenever there is a trend up, I am there. But people, they don't believe in the criteria that I use. And when it's going up and it begins to be so good, I bought it at $19.99 after the day when it was $17.55, which is the very low of Facebook. I put videos. For example, you tell me, oh, how would you do that? It's not true. I say, okay, go to my early videos of Facebook in 2012 and you watch my videos, and you will see I told them before that Facebook will be $100. No one believed me. When the stock was 25 or was going down, and analysts were saying that Facebook is a sell, it is not a buy. They always say this for 6 months. But when the trend has begun and they see the trend has begun to go up 30, 35, 60, 70, oh, and then they change their mind. And they all say, oh, Facebook is good. No, you can't change your mind just in one night. You change your mind. Okay? Because those people, they believe in the past. They see the past and they say. They don't believe in something that they own, like criteria or something. And sharing the criteria, see, it's not the problem of sharing the criteria. It's the problem of studying, because trading is not only to search for stock. It is a lot of things. It is the whole account, trading account, that you should take care of. You should think about risk in anything. Expenses, commission, fees, how to deal with position sizing, how to follow the stocks, how to put the stop loss. All these are things you should study, you should practice for many years in order to become good at it. It's like a skill. It's not the skill, it's not just to know the skill, it's to use it and know what you are doing. It's like I'm telling you always, like a boxer. It's not you train yourself in one night and the second night you will become a professional boxer. It's impossible. You should practice, 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 practice until you succeed. That's it. Trump said, can you take a look at a stock? What's this stock? I? Is there a stock that it is called I? I have no idea. Intelsat. Okay. So, Intelsat, as you can see, is a pump and dump scheme. See? It's going up, going up, going up, going up. And then one day it can go down so bad. Okay? So see? But when you see it, this is a pump and dump scheme, small one. This is another pump and dump scheme. This is another one, and this is the biggest. It takes days, yes, but it can go down at any moment. Now, if you tell me, what do you think about it? I say, if you bought it at the beginning, yes, you can make a lot of money, but right now, it is not. Okay? So, it is not. It's over. Tomba Nair said the question, do you have any stock that you have connection with? Now, what do you mean by connection? I don't understand what you mean. What do you mean you have a connection with? It means, do you own a stock right now? Yes, I own a lot of stocks because I trade always. But I don't understand connection. What do you mean by connection? Okay. Hello, Andy. Please, Andy, I'm trying to explain one by one. So I will be with you shortly. So there is a question. It says, which stock is more profitable, the ETF or penny stock? There is no relation of what you said. First, you should understand what is an ETF and what is a penny stock. An ETF, it is a stock that tracks an index. Okay, I will explain just very quickly. So let's begin with the ETF. Okay. Okay. So ETF, exchange traded fund, tracks index. I will explain. Let's say we have what we call Dow Jones, which is very famous. The Dow Jones. Now the Dow Jones have 30 stocks. Now the average is the index. Let's say now it is, let's say it is $24,550. Just an example, okay? This is the index, but you can't buy the index, which is 24,500. They put in ETF, which is called DIA. Let's say it is $255. Now, $255 is the average of 30 stocks. Now, the average of 30 stocks, it means stocks that go up and down, and the sum of these stocks and the average of them is $255. This is the average. But a penny stock is something else. Penny stock is only a small company. A small company that the stock is under $5. Most of the people say after under $5, it can go up very quick and down very quick. So it's volatile. But the Dow Jones, it's not so volatile as a penny stock. So you are not comparing things wisely, because ETF, it could be tracking anything. So who profits more? It depends. If you buy a penny stock that is going down and ETF is going up, the ETF will be making more. But if a penny stock is going up too much percentage, like this one, okay, I will just give you this one, this example. Okay, so this example shows you a stock that was here, that was $4, now it is 14. Do you understand? Do you understand this? A stock that was a penny stock. This is a penny stock. That was $4, it goes to 14. So penny stocks, when they move excellent and the best than any ETF. So penny stocks in these things are better. But let's say you buy a stock at $4 and now it goes to 2 cents. The penny stock is worse than an ETF. So it depends. It depends how the stock moves. But if you have an ETF and a penny stock and you say compare with them, you should give me an example here, and we compare them. But you don't just compare ETF with penny stocks, because it depends on how these things work. Okay, this is just an example. Hey Pablo, how are you? Thank you very much for coming. Robert Polo said, ETF for long-term investing, hot stocks for intraday or swing trading. Yes, yes, for the short term, but understand the direction. The direction, it means if you are making money, yes or no, with ETF or with penny stock. So if you are not making money and you are losing money, a penny stock would be more risky than ETF. Like Snapshot. Okay, let's go to Snapshot. It was going bad the other time. Yes, we have spoken about this before. Snapshot was having a gap up before. It was so excellent, but now it's going down and it has a gap down, so it is doing so bad. This small candlestick that you see here, you don't see it at all, but it is 13,600,000, and it just go 3 cents. It means a lot of people are trading this stock, but I think it's dying. It's not going anywhere. Okay, it's not going anywhere. Hello, hello, Andy. So he says, what happened with Toys R Us? Let's see. I don't know about this Toy and Us. Toys. I don't find it. Let's see here, Toys. There is the Toys and Games, the Industry, Playmates Toys, Spiral Toys. There is no. I don't have them. So do you have the symbol for Toys and Toys R and Us? Do you have the symbol? Because I don't find. I don't find the symbol. Okay. See, if a company has filed for bankruptcy, the stock will be delisted from the exchange. It will become private again, and they sell all the stores, and they give the money to the people first of the company. They own the company first, and then if there is more money, they give it to the people who own stocks. But if it is taken out, sometimes it is zero. Zero, it means they give no money. So I have no idea about this. And believe me, Andy, I am not following stocks that are having problems. Because a stock that it is going up will have never problem. Because the people are buying it. Because mutual funds, they don't buy companies that are going to be bankrupt. Because they are scared also to lose their money. Okay? So that's why we don't play with these companies. But I have no idea. One Dicasso said, CBB, is it good to buy from support line or wait? Oh, no. No, 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 no. One Dicassa, I'm not giving you here recommendations what to buy or what to sell. So, one Dicassa, if you want to ask me about a stock, it should be by email, because you are my student, so you should ask me by email. I don't give recommendations on stocks. I just give my opinion, but I don't give recommendation to buy or to sell. Is it safe to invest in technological companies? Who is this guy who is he has no name at all. So, you say, is it safe to invest in technological companies? How do I know where you are investing? You know, companies, technological companies or not technological companies, you will never know where they go. You should study investing in order to search the best companies, because in technology or in other industries or sectors, there are good companies, there are bad companies. Okay? And sometimes technological companies are going down, all of them. So whatever you buy, you will have a problem. Okay? So, sorry for that. So, please, for example, if you want to understand how I buy or how I sell, I have some what we call criteria to choose. Okay, I have some criteria to use, and some strategy. So I don't just buy because it is technology company. All the companies, I use the same strategy. Okay? All the companies, I use the same strategy. So that's the thing for this thing. Now, Wiseman said, I heard Toys and R Us filed for bankruptcy. So for me, I have no idea about Toys and Us. Toys R Us. I know this company because I shopped in this company once. But understand that these companies, they are selling toys. And there are bigger companies that they can compete with them, like Walmart or like Amazon. And everybody is online right now. So some companies, they can't make it. Okay, either Toys R Us or other companies. There are other big companies and they can't make it, like Giuseppini, like Sears, like other stores, because a lot of competition and they can't sell well, so they opt to stop business because they can't compete. So Wiseman said, Walmart and other companies put them out of business. They charge too much for their products. Yes, as Wiseman said, I know from just in general thing that Amazon and some other companies like Walmart, they beat everybody in prices. Okay? So when you have a product to sell at $10 and a company put it at $3, okay, you go to $3 and you leave $10. So that's why these companies, they don't stay. But before, they were very successful because there is no big competition. But online competition and some other companies that they become bigger and bigger and bigger, they took all the business from all these companies. And the companies that are bigger becomes bigger and bigger and bigger, and the companies that are medium becomes small and small and small, and then they file bankruptcy. Okay? Robert Polo said, how to know which stock is supported by the mutual funds? Do we need to read certain filings? Oh, Robert Polo, this is what I teach, but I don't use filing. I use only the price. I told you before that I don't use company information, but balance sheet or any information from the company. I don't use earnings. I don't use analysis. I don't use no one. I use my own criteria and how I look at the company through the chart. If I have a trend, a stock was at 20, it goes to 60. Who cares about the company is making money, yes or no? Who cares? Okay? No one cares. What you care about is to make money. If you care to make money, don't look at the company itself, because the company and the stock are different. A stock is into bidding. It means people, they bid, they buy and they sell. But the company is doing what it is doing. It is selling something online or in stores. This is what it does. But it has no relation with its stock. It cannot influence the stock. It's not because it is Walmart. Why? For example, Walmart is one of the biggest company in terms of money. They make a lot of money. It is one of the first company in the world. Okay? But why Amazon is better than it and the stock is $1,500 and Walmart is $83? Can you tell me the thing why? It has nothing to do with the company itself. Sometimes it is just the people, when they find a winner, they stick with it. And these winners continue to be a winner until they stop to become a winner. That's the deal. So for me, Robert Polo, I don't use family, what you call the information about company filings, earnings, what it does, how much money it makes. No, I don't do that. Just to make sure you understand how I work. That's why I told you, Robert Polo, if you go and check training level 1, just go and watch the videos and you see how my strategies are so different from other people's thing. Mustafa Leah said, what's criteria that you basically take into consideration before investing in any stock? Now, first, Mustafa, the first thing you should understand is the word investing and trading. I will explain now just to get an idea before we continue with your question. Okay, so let's see. Now, here is just an idea about two things that you should be aware of. There is investing and there is trading. Now, investing and trading are different. two activities that are different. Now, trading, it is short term. It could be